when you see energy and financials moving higher here again today, the news hasn't materially changed. What does it tell you about the sentiment in the market here?
I think it tells you that the sentiment and the understanding and the clarity is close to zero. That is to say, there are all kinds of cross currents, not a lot of places to put stakes in the ground. Typical for the second phase of a bear market. You get the waterfall decline, then you get that sidewise massive chop that can last for weeks, and that's what we've been in. It's been mostly to the upside, thankfully. But earnings, what are they going to be? What's the right price-earnings multiple? No one knows. A lot of uncertainties. That's why you're getting this whipping around with the market as a whole and inside the market, as you just pointed out.
Right, Bob. So are financials a buy or a sell at this point after this quarter?
Depends on your time horizon, in my view. I think as and when the economy begins to improve, these are among the cheapest and I would argue best positioned cyclicals. So if you can to stand some more whiplash in both directions, buying them on weakness, I think makes sense. I wouldn't chase them on a day like today. I would wait for another day like the last couple and, buy into the weakness. But I think you need to own some of those big banks into the economic improvement.
One of the things, Bob, that's happened in the last few days, few sessions, has been a kind of, I think, a repricing, a rethink about how short and sharp this recession might be. Some now suggesting that it may go on longer, might be a W, not a V. Do you still believe in short and sharp?
I do. I'm using a check mark, meaning a sharp drop and then an improvement, but at a much slower pace. And it'll be choppy, not like the straight line of a check mark, as we experiment with opening up various points in the economy, deal with some setbacks related to businesses not turning on. Let's hope not, but the possibility of some secondary waves of coronavirus. So it's going to be choppy, but I think as we turn the economy back on, coupled with the massive stimulus in the system, monetary and fiscal, there's a chance we're going to see some better economic news off the bottom into the end of the year.
Bob, is it time to take your money off the table when it comes to bonds? We've had, one famous name say you'd have to be crazy to buy bonds right now, and several others agreeing with him as well this week.
Yeah, I'm in that camp as well. I mean, I think buying a 10-year Treasury and getting 61 basis points per annum for the next 10 years is probably not a very good deal, Bonnie. Contingent, of course, is that we do have economic recovery and some return of modicum of growth, and I think we will get all that. The bond market, treasuries in particular, I think are still suggesting there's a lot of trouble out there. We do these 10 predictions every year. We just revise them for the first time in history, and our guess is by the end of the year we'll have a 1 handle on the 10-year treasury yield.
I want to talk to you about where you're looking to put some money here. Are you still believing in value and cyclicals?
I think for the next leg of economic growth, yes. I'm going to hedge that by saying don't give up on a lot of what got us there. This is the third massive exogenous shock, the first portfolio insurance in 1987, the second at 9/11, and now the coronavirus. And if you look at the first two, what led after the decline in the middle was the same thing that was leading before. So what's led this market? Technology and secondarily healthcare. I think that those sectors will continue to do reasonably well. Maybe own a little more value inside technology and a little less growth, but I'd wait for economic improvement before making that significant change of pace.
Bob, what's the appropriate multiple, would you say, for the S&P 500 right now?
Well, that's a great question, and the second and harder question is what's the right earnings to put that multiple on? Yeah. I'm guessing earnings of 120 to 130 this year, 150 to 160 next year. I think the market will pay little attention, believe it or not, to this year, even though we're only in April. And so if we look at next year and you put a 17 or 18 multiple on that, it gets you to a level actually around where we are today, Bonnie. So it's hard for me to pound the table. To repeat, think the market's a little ahead of itself in the short term. I wait for some red days to do much buying.